Coming through at this stage, dollar yen at 91.16, also against the euro at 148.93. But look at sterling, we are seeing strength there at 163.61. Let's bring in Sam Stanley, dealing director at Halo Financial, for a bit more on some of the currency market action. Sterling has been showing some strength this week. How much further to go? Is there enough momentum behind sterling now to take us a bit further?
I think so. Certainly, Becky, at this stage, it's been very, very oversold, the pound. It's been absolutely hammered in the currency markets over the last few months. So we were due a bounce. I think we could probably see it up towards 164.55 as our target, top of a channel. And then probably down from there. So, you know, it's about time. I think the amount of bearish positions out there in the market at a 17-year high for the cable.
Sam, it's Brian here in the States. Good to see you, bud.
And you.
I want to ask you, I always sort of throw at you some maybe more broader brush philosophical questions, but it seems no matter what they say, the government policymakers here in the States kind of seem to want a weak dollar to reflate things a bit, but it's a slippery slope. What do you think's really going on here on a policy standpoint?
I think they're quite happy to see a weaker dollar, Brian. Even though they don't come out and say it, they keep on reiterating the strong dollar policy. We saw that again from Summers and also from Geithner as well. They want an export-led recovery as much as possible. The current account position has improved in the States and will continue to improve, particularly with the yuan being so strong. But really, at the end of the day, they're probably quite happy to see the dollar reasonably weak. Now, if they come out and do what the Bank of England does and basically indicate that it's very helpful to have a weak currency and indicate to traders that they're happy to see it go lower, that's dangerous, because basically traders are undisciplined at times, Brian, and they don't really know where the bottom is. So if we ever did see comments like that coming out of anyone other than you know, Greenspan came out overnight, but out of Bernanke, for example, I think we'd see a real rout in the dollar, and it wouldn't be good at all.
Hey, Sam, this is Christine here. Do you think China would let its Chinese yuan currency appreciate at the expense of the weak dollar?
I don't think they will, really. I mean, they've tried that before. They removed it in 2008. They do prefer the peg. I can understand why. Their exports are down 30%. And really a weaker yuan pegged to the dollar, nice and stable for them, means that they can keep its business as usual. Of course, the Americans would be quite happy to see a weaker yuan, but really at the end, sorry, a stronger one. But really, at the end of the day, they're quite happy keeping the Chinese, you know, happy with their situation, because they're the ones buying all their treasury bills and funding the budget deficit.
Sam, the Aussie dollar has been a real stellar performer this week, I suppose. Comments from the RBA governor seem to indicate that we may get not just the rise in interest rates already, but several more rises still to come, and maybe even 50 basis points at a time is what people seem to be saying. And the currency moving accordingly. Is there a risk that markets are getting ahead of themselves and that the RBA won't be quite as aggressive as we now seem to be expecting them to be?
There is a risk. I think he was quite clear, really, in his rhetoric earlier on in the week. I think we will see 25 basis points in November and 25 in December. Some people think 50. I don't think he's going to be that strong or that hawkish. But really, I mean, the risk is really for Australia that they do too much too quickly. I think he's doing a good job, Governor Stevens, but he's a brave man. If it was me, I wouldn't be hiking rates at the moment. I'd be holding off. I'd be waiting a little bit longer just to see whether everything was okay, and then I'd probably go bang 50 basis points. The problem is, if we have any sort of slip-up at all over in China or anywhere in the global economy, Australia is going to be right in the thick of it. They're going to have a much stronger currency, which is it's going to start hurting their exporters, plus very, very high interest rates in comparison to the rest of the world. So, in effect, I think he's playing a dangerous game, but he's doing what he sees right. So, I don't think the markets should be looking beyond 3.75% at the end of this year. Some people talking about 5.5% into next year. I can't see it.
OK, well, time will tell, I suppose. Sam,
absolutely.
Thanks very much for coming in. Sam Stanley, dealing director at Halo Financial.